Well, good morning, everyone. Thomas Montgomery with Smart Money Alliance and IIMFL. We are here for our daily, Monday through Friday daily, that is, webinar, Zoom webinar that we have for our current financial literacy educators, our prospective financial literacy educators, and our leadership team composed of branch managers from coast to coast. We're going to start with a review of our mission statement, and we're going to go ahead and get started with our content thereafter. We are a nonprofit organization committed to narrowing the racial wealth gap by teaching financial literacy, improving credit scores, and facilitating the development of minority-owned small businesses. The view that you see here on the screen right now is that of a replicated website. We offer each of you a free replicated website. When the forms are completed, you'll be notified. On the home page, we can change up the gender, the demographics, the racial background of the person. But this is what your replicated website looks like. Today, we're going to focus on the Capital Ready package. The Capital Ready package has evolved, and we call it 2.0. The first one started back in, November of 2018. We've enrolled and successfully helped thousands, literally thousands of small businesses from all different industries all across the country. Capital Ready Package version 2.0 is probably the best kept secret in the small business finance space. I wanted to spend a few minutes going over it with you and then specifically addressing questions, comments, concerns that you may have, because what we're seeing is this divide between the haves and the have-nots. And I think that's somewhat a microcosm of what we see in our society, unfortunately. But even with our distribution partners, each of you, we see some of you just knocking it out of the park, right? Earning significant income, helping lots of small businesses. And then in contrast, there's others of you that aren't. And maybe this is the missing ingredient. Maybe we've not spent enough time, enough attention, enough focus on prompting you about helping small businesses with the Capital Ready package, because it is a slam dunk. So let's go through and describe it, and then we're going to dig into your questions, comments, concerns. So first of all, where did this come from? And there's a really nice, about 10-minute YouTube that's here that you can use to share with your prospects if you would like. And again, this will be on your replicated site. But it came from the input of a group of SBA and SBDC advisors, Chuck, Mark, myself, for example. SCORE mentors. We collaborated with over a dozen SCORE mentors, college professors, some business bankers, including a president of a regional bank in East Texas was highly involved. And our goal was to put together a systematic approach to raising capital that always works, That's a pretty strong statement, right? We can take any small business, pre-launch, startup, or existing, regardless of personal credit scores, and guarantee them at least a $100,000 capital raise. That's a strong statement. Now, at first you can say, well, that sounds too good to be true, but it's not if you understand the process. If you understand the program, if you understand what we're doing, then it's very logical. Then you say, oh, okay, I get it. So we'll continue on and make sure by the end of today's training that you all have that light bulb over your head to realize, wow, this is powerful. I can go out to any key influencer, any church, chamber, co-working space, business organization, business association, and what I can do is let them know how I can help their sphere of influence, small businesses, raise at least $100,000. Now, let's go through that. One of the changes that we made when we went from version 1.0 to 2.0 is we eliminated the upfront fee. So it even got better. If you remember, way back when version 1.0 had a $300 upfront processing fee, that went from $300 up to $499. So then individuals were paying $499 to actually enroll in it. We've waived that. There is no upfront fee. We've eliminated that. That makes it even better. Secondly, what we've done is, while there is a refundable deposit, which we'll talk more about in a moment, we split that evenly, 50-50 with you. So those of you that are taking the Capital Ready package out to the marketplace, you're earning upfront $1,250 every time a client enrolls. And so they're getting a great deal, and you're getting almost what I'd consider free money. So let's talk about what's included. Just like you hear us talk about all the time, we're going to start with putting together a loan package. So the loan package that we do in the 4-week access to capital program, the 4-week, the entrepreneurship program, and the Capital Ready is the same. So that 4-week process is the same. It doesn't change. The difference here is what we do with them after we've completed putting together their loan package. Now, I will note that it may not be a loan package. It may be an investor package, because it may be that they want equity-based capital, money that they don't have to repay, versus a loan that they do. But in either case, that's included. That alone is about a $5,000 value. And how much do they pay for it? Zero, right? Because we've eliminated the upfront processing fee. Granted, there is a refundable deposit, but we'll get to that in a second. Next, we're going to work with them on building out their business credit profile. Most small businesses don't understand business credit. Most of them have not worked on that and perfected that, so they're not as strong on paper, which limits their access to capital. And so some types of capital are based only off of the EIN, only off of business credit, with no personal credit guarantees or personal credit consideration. This, again, is about a $3,000 value. So with no upfront cost, they're getting already $8,000 of value. Third, now let's say that their personal credit isn't so good that it needs to be improved or could benefit from optimization. No extra fee, no surcharges. It's all part of the package. And depending upon what you pay for credit repair, we'll call that another $1,000 package. And then the ongoing education, which is important. So with that, there is a refundable deposit. So no longer is the $499 collected. See, it says it's being waived. No longer is it being collected, it's being waived. So they do have a $2,500 refundable deposit. Here's how that works. You're going to collect the $2,500 from them when you enroll them. Just as we talked about, you're going to keep half and you're going to submit half. With that, then, that refundable deposit allows us to work with them, fulfill the program that we're talking about, and as long as they stick with it, so in other words, as long as they do what they promised to do, because we're promising what? We're promising at least $100,000 capital raise. We're promising that verbally, we're promising that on the website, we're promising that in the agreement. We're contractually committed to accomplishing that. Now, they need to do their part as well, and part of that is to work with us to get at least $100,000 capital raise. So the analogy is like leasing an apartment. If you ever leased an apartment or a house, usually you pay a deposit, but you get the deposit back if you complete the lease. Very similar here. Pay a $2,500 deposit, but as long as you complete the terms of the agreement, which means work with us to raise at least $100,000, then in fact, you get that $2,500 back. Let's drill into that more. Oh goodness, does that mean that you have to pay back your $1,250? No. In fact, you don't. Do you need to pay taxes on that $1,250? Visit with your CPA, but what you may see is if it's a refundable deposit, it may not be considered as earned income. But I'll leave that alone. That's between you and your accountant. But the bottom line is, once they have reached at least $100,000 capital raise through the grant, they get that $2,500 back. So they've ended up paying nothing up front for the program. You keep your $1,250. That's a damn good deal. That's a heck of a proposition. Now, with that being said, you could certainly say, well, Tom, sounds really good, but some small businesses don't have $2,500. Well, of course, then you can always pivot them over and get them into the 4-week access to capital / the entrepreneurship program. And as you know, they're only paying $99 to get started on that. And if they don't have at least $99, they're not ready to run a small business. Obviously, they have some deeper issues. Maybe you need to bring them aboard as one of your financial literacy educators, let them go teach for a month, earn an extra $5,000, and then they would have the $99 or even the $2,500. Okay, so let's go through the $100,000 guarantee, because this is not too good to be true. It's a process, right? It's a process. We understand the process. And what we're going to do is take them from where they're at to where they need to be able to raise at least $100,000. It's not too good to be true, but it is a process. So with that being said, all participants in the Capital Ready Pro package are guaranteed at least $100,000. And we're going to continue to work with you until that goal is reached. Obviously, the sooner the better, right? The sooner that we reach that threshold, the happier they are, the happier you are, the better we look. So quicker, the better, right? But each individual business is going to have different circumstances based upon what type of capital they're looking for, how qualified they are, what needs to be done. And so that's where we address the length of time is based upon the client's circumstances. So what we don't want you to do is to promise, oh, in 30 days, you're guaranteed $100,000. That is too good to be true. I would be very skeptical if someone told me that, and I think any prospects would be skeptical or naive. So can we guarantee the outcome? Absolutely. Can we guarantee that that's going to happen in 30 days? No. Could it happen in 30 days? It could, but don't make that commitment, because we need to build the loan package and get the plan together. That's like saying, okay, I want to go on vacation. How long is it going to take to go on vacation? Well, where are you going? Are you going to Boston? You going to Miami? Are you going to drive? Are you going to fly? You going to ride a bike? You know, so we've got to figure out the details before we can put together a time frame. Now, let's go ahead and talk about the time frame, because you know as well as I do, clients are going to ask, well, how long is it going to take? And of course, anytime they ask that, that shows that they're not financially literate. So that's not a negative comment. It's just they're not, because they should know that we're going to need to know more about their variables and their circumstances to even answer that question. But that's a good litmus test. If the client asks, well, how long is it going to take for the 100,000? Then you know that you need to help them become more literate, because that's a question that only a novice would ask. Because until we build the loan package, who knows what needs to be done. Now, with that being said, let's go through the typical timeline. So they're going to submit the inquiry form, which is here to the right. You can bring them to this main site if you don't have a replicated website, or you can send them to your replicated website. So you're going to submit this information and you're going to put a note in here. So let's say I'm Desmond. So I collected $2,500 refundable deposit from, who did I collect it from? I collected it from, we'll say collected it from Brandy on 8/13/20 and submitted half via Zelle on, and then of course this other date should be about the same, because we're going to implement once we. So the bottom line is you put in the client's name here, the client's email, the client's telephone, and then clarify with us that you've collected the money. So we're not going to collect the $2,500 refundable deposit from them. You've already collected it. And then you keep half and you submit us half. And of course, put your name down here and then submit this in. All right, so time frame. So we were on the first bullet, just described that. Then we're going to send the DocuSign to them. We will make note. We will do a couple things. We'll carbon copy you on the DocuSign so you know that it's gone out. And then secondly, we'll make note that the refundable deposit has already been paid and posted to their account. So they don't have to worry about being charged it again. And it reflects that we're all doing what we said that we would do. They paid you the $2,500 and it's posted to their account. Then we're going to get started, and we're going to start with the loan package as we talked about. That's normally a 4-week process. We're going to have weekly. We want to have a high level of support. So there should be a weekly communication with each of the clients that's going through the process. And in around 30 days, we should have the loan package put together. And then at that point, they may very well be ready for funding, or they may not be ready for funding. And if they're not ready for funding, then we work on whatever the obstacle is. If they're ready for funding, we'll go to funding. We have a whole new funding department that just rolled out this month. And so we've got the depth of the team and the bandwidth and the options to get these small businesses funded. I know that was a bit of a backlog or a delay before. No longer is it. All right, so this is the Capital Ready package. It's on your replicated website. The YouTube video I'd encourage you to watch if you haven't seen it. It's a good 10 to 11 minute overview. That's something that you certainly could share with them, either to share the YouTube, direct them to your replicated site, or just learn it enough to be able to describe it. And here's the key points. We've talked about the process. You're to collect the $2,500, just like was it Desmond did in this example. Submit this in so we know that the client is enrolling, what the status of the funds transfer is. Of course, put your name in here. This comes in, you send us half, you keep half, and then we implement. So it's pretty slick. Now, on the back end, since we're helping them raise capital, there is a performance fee that we charge them for the capital raise. And you earn up to 5% of that. So let's work through the math here. So you're earning $1,250 up front, half of the $2,500, and you're earning, frankly, a little bit more than half of the back end. So if they raise $100,000 even at 5%, you earn $5,000. Let's say that they want more than 100,000. Let's say that they want 200,000. So we raise 200,000, then you can earn up to 10,000, 5% off of 200,000, and so forth. So each client should be generating at least $6,250 for you, at least $1,250 upfront immediate, plus at least 5%, 5,000 of the $100,000 capital raise. Plus, then also, if you want to, you don't have to, if you want to set up their key person policy, then you'd be paid a third time. So there's 3 payment triggers to you: $1,250 up front, up to 5% of the capital raise, whatever that amount might be, and thirdly, the key person policy. The amount of the key person policy, of course, will vary based upon the premium that they pay in, how the policy is structured, but you could make from $500 to $5,000 off the key person policy, but that needs to be suitable to the specifics of the client. But you're going to be earning over $5,000, and let's just say up to $10,000 per client. So that's not bad at all. All right, so let's go through and let's look at some of the questions you have. And that's really what I want to focus on. We have about 12 minutes left. Pepper in the questions, comments, concerns, because it's important that you understand this. This is a unique proposition in the marketplace. I don't know that there's any other, I know we're the only grant recipient, but I'm pretty sure that there's no other model in the marketplace that is, number one, guaranteeing at least $100,000 capital raise, regardless of time in business or personal credit score. There's no other player in the marketplace that has no upfront fees. I know we have a refundable deposit, but it is a refundable deposit. And I don't know that you're going to find another option out there that has such a generous payout. I mean, we're paying you 50%, $1,250 of this, up to 5% of the capital raise. And then, of course, you're making 100% of the key person policy. All right, so here we go. Let's see. Monique asks, is this different from the funding program we shared a few days ago? Well, the Capital Ready program, again, has been around for almost 2 years. We switched from 1.0 to 2.0 as we made some improvements. We removed the upfront fee, so that's gone away. We don't have to worry about that anymore. And we increased the commission payout, so now it's a 50-50 split. But we've not talked about the Capital Ready package in a while, but it's overdue. So let me know, Monique, if I missed your point or missed your question on that. All right. And James is asking about the key person policy. So most lenders are looking for a policy that is set up to serve as a collateral assignment. And what that allows the lender to do is, if the borrower should die, that the lender is paid the amount of the open loan up front rather than waiting for whomever the successor or the survivor is that's running the business now to get paid. And we can structure it a few different ways. What most of us are doing is setting that key person policy up to serve two goals: to set up a retirement, a savings, and asset protection plan via an indexed universal life, and then also doing the collateral assignment. So that's the norm. And that key person policy is not paid by the individual, and nor is it an asset of the individual. It is an asset of the business and paid for by the business. Thank you, Rainier, for your compliments. Jackie asked a question, and Jackie, I'm glad you asked that. There are no personal credit score requirements to enroll in the Capital Ready package, and so there's no minimum. The minimum requirements are the same as it's always been, and I guess I should have stated it. It needs to be a legal business model. So if they're into human trafficking, child porn, elder porn, bestiality, anything that's illegal, we can enroll that industry type in. Secondly, it needs to be a US-based business. Now, it could be pre-launch, but when it is launched, it needs to be in the US. And we need at least one of the business owners to be a US citizen, have a social security number. Those are the only three requirements. So to answer your question, Jackie, so no, time in business is not a prerequisite, nor are personal credit scores. Now, with that being said, each funding source has its own underwriting criteria, and so we're going to take into consideration what they have. The analogy I often use, which is probably a bad one, Jackie, but let's say you and I are going to make dinner tonight. So we go into the pantry or the refrigerator, and we see what ingredients we have. We'll probably want to make something of the ingredients we have. And so instead, if your craving is lobster ravioli tonight, we can probably find a recipe for it, but if we don't have the ingredients, that's a barrier. So we would have to go get those ingredients. So that's the analogy here. We're going to work with the ingredients we have. We're going to work with what they have in their refrigerator and or their pantry. If they're wanting something that they can't accomplish through what's in their refrigerator or their pantry, then we're going to have to go get those extra ingredients. But with that being said, different sources of capital have different underwriting criteria. It's not a one-size-fits-all. This is not like the SBA Express program, which is over here, where we're saying, oh, everyone's going to get an SBA loan. Well, not everybody qualifies for an SBA loan. Could anyone qualify for an SBA loan given enough preparation? Probably so, in general. However, this is not pointed specifically to one source of capital. Thank you, Jackie, for asking. Natalie asked if she doesn't collect the deposit, like our example of Desmond doing here, then do we collect it? Well, you won't be paid off of it, right? Because you're the one that's going out and educating them. You're the one that's enrolling them. And so if you want to be paid, then you would follow that process. If you don't collect the deposit, then you're not paid. So that probably wouldn't be worth your while. Now, I hate to use these terms, but if you're not a closer, and I'm not picking on Natalie individually, but if you're not a closer, if you're not someone that is comfortable in helping the client pull the trigger and enroll, that's okay. Then work with a closer. right? You can work as a team. We just talked about this yesterday. It's absolutely foolish to go out into the marketplace as a lone ranger, because what you should be doing, in my opinion, is teaching, conducting workshops, although people don't have to attend a workshop to enroll in this. But when you start educating, you're to create a massive funnel, and a good number of people are going to enroll. And so it always makes sense to have a team of financial literacy educators. You earn overrides from their production, and they may have some strengths that you don't have, and vice versa. But the short answer is, Natalie, if you're one of our financial literacy educators, you collect and you keep half. If you don't collect, then you don't get half. It's not a referral program, I guess. And Desmond's asking a great question. Yeah, so we previously had version 1.0. What we're talking about is 2.0. We're not talking about 1.0. We're talking about 2.0. And so if they're in 1.0, then what we're talking about here doesn't apply. Brandy asked what the client's responsible for, and all that's in writing, but in summary, Brandy, they're responsible to work with us actively to complete the process. We need to build out the loan package. We need to figure out where we're going to go for capital. If there's any deficiencies, we need to work together to address those. But essentially, it's just to work together actively and in good faith to get to this goal. Because what we don't want them to do, and we've seen it happen, let's say, because understand that the $100,000 always doesn't come in one lump sum. Let's say the first round of capital was $50,000, for example, just round numbers. Brandy, what they're agreeing to do is, just because they get a quick $50,000, that doesn't mean that they quit. Because for us to get the acknowledgement, the grant funding to refund back the refundable deposit, this is the threshold. This is how the grant was written, that will help any willing small business raise at least $100,000. So Brandy, if they just get a quick $50,000 and say, oh, I'm done, it's good enough, then they've breached the agreement, haven't they? So then they're not going to get their refundable deposit back because they didn't do what they said. They moved out of the apartment after 6 months instead of 12 months, is that analogy. All right, great question, Brandy. Jackie asked about building the loan package in quicker than 4 weeks. Yes, it's possible, but I would rather them have the expectation that it is going to take 4 weeks, but it could happen sooner. All right, James asked, should we inform the client during the process of the refundable deposit? Oh, okay. I think there's two parts to James' question. So certainly, I mean, because they can't get started if they don't submit the refundable deposit. So that shouldn't be a surprise. I mean, that's a great selling point. You're letting them know that we've got a promotion that's waiving the normal $500, $499 enrollment processing fee. So this program now is actually cheaper than just building a loan package as a standalone. Because if you do a loan package as a standalone, they're either paying $396 up front or $99 times 4 weeks, which is $396. In this case, we're doing that for free. There is a refundable deposit, but it is a refundable deposit. Therefore, this is actually the cheapest program we have because there's really no upfront cost, and we have a contractual guarantee to help them raise at least $100,000. Okay, let's see. Oh, but James also asked, should we let them know about the key person policy? Yeah, I think that would make sense. We let them know about that in the agreement, but they need to position their business for a capital raise, and having collateral is part of that. And the collateral assignment is a third-party instrument issued by a licensed life insurance policy that will allow them to pay off the remaining balance of any business debt if they should die. And that's good. So the business is freed of that debt and their family doesn't have to worry about it too. All right. Okay, I see. Monique's, I think, clarifying about the $100,000 business line of credit. Thank you, Monique, for the explanation. So no, this is not specifically to get a $100,000 business line of credit. This is called the Capital Ready Package, and it's what we've been discussing today. Desmond asks, is this the new Capital Ready? Well, yeah, it's Capital Ready package, Desmond, version 2.0. Brandy's asking about the step-by-step. So yes, we have a very nice systematic process for them to go through the 4-week loan packaging process. Absolutely. We've talked about that already. Robert has a friend who's an extraordinary artist. Perfect. Yep. Enroll your client, Robert. You know how to do it. Put in her name, her email, her phone. Collect the $2,500. You keep half. Submit half to us. Put your name in the referred by, and we are going to implement, Robert. Desmond says it sounds great. Thank you, sir. Renier asked a good question. And whether there's kind of a couple layers to it in terms of what if the client doesn't want 100,000? Let's just say that they want $1 million. It's the same exact process. The same exact process. 100,000 is the floor, but the higher the amount, the process doesn't change. It's the same process that we've just went through. So we're only willing and frankly able to make a guarantee of at least 100,000 for everyone. That's the blanket guarantee. Now, certainly we could work towards much larger capital raises. Okay, let's see. James is asking about the cost for the key person policy. And as I mentioned, James, that's going to vary in a couple things. Of course, the age and health of the key person is going to impact that. Secondly, the amount, the face coverage that's needed based upon how much protection essentially the lender needs, how much exposure they have. And then thirdly is how you go about structuring the policy. The way that we like to structure the policy is it's essentially free to the participant. What I mean by that is we use it as a retirement plan. Everyone needs a retirement plan. Most people don't have one in place. And so they're using it as a vehicle, kind of like a 401k alternative within their business. So it's funding their retirement as well as short-term savings. And with that, then it just so happens if they die that the policy would pay off the lender. So if it's built correctly, it's solving two problems, and it really makes the cost irrelevant because it's accomplishing those things. All right, let's see. Teresa says she has a small bookkeeping business. How would this benefit her? Well, it's almost so clear it's hard for me to understand. If you and your small bookkeeping business or any other small business, and there's what, about 28 million of them, is looking for a capital raise, then this could help them, right? And they understand the process that we go through and the guarantees. So, what's the problem that we're solving? Most small businesses do not have access to the capital they want or need to reach their potential. And we've got a guaranteed solution to that. And that's unusual in the marketplace. It's credible, it's reputable, it's proven, and it's very lucrative for you. If you think you can just go take them to the local bank and you can make about $10,000 for just referring them to the bank and that they're ready for bank funding, then frankly, I would do that. But I suspect the bank won't pay you $10,000. And I suspect many of them need some prep, some packaging, some work before they're eligible. This is a huge opportunity. I mean, even if you just committed, work with Jennifer and just enroll one client a week, right? That's an extra $55,000 or whatever it is up front. And then as those clients work through and get funded, now you've got an extra $250,000 a year coming to you. And if you decide you want to write the key person policy, it's on top of that. I mean, just one a week is more than the average American household makes. Teresa asks, so if you're a financial literacy educator and or a branch manager, then you wouldn't need to pay the $2,500, of course, because we're doing a 50-50 split, just like we talked about with Desmond, our example here. So you wouldn't need to pay the full amount. You would just pay your half. It's a glitch in the system that I'm a little bit hesitant to mention, but Teresa, it's worth mentioning, that you would still get $2,500 back even if you only paid the $1,250 in, because that's the way the agreement's written, the way the grant's written. You're going to get your $2,500, or what we considered your $2,500 refundable deposit, even if frankly you only paid $1,250. Peter's asking about the 9.5% performance fee, and he's right. We brought this up before. If you want to discount that performance fee, you can discount it down all the way to 4.5% performance fee instead of 9.5. The agreement's going to be written as 9.5. We're going to collect 9.5 from them. We're going to pay you the 5%. But with that being said, if you want to rebate that back to them, you can. And of course, 9.5 minus 5 is 4.5. So Peter's right on that. C asks, what's the interest rate? Well, I don't know. What type of capital do you think that they're going to qualify for? We have to go through this process to figure it out. I think C's just testing me because she knows better. Anytime people ask you simplistic questions about the funding instrument when we've not even done the loan package, that lets you know that you need to do some financial literacy with them, because this is not about one certain source of capital. There are many different sources of capital. We need to figure out what the right source is for them. And so until we get through that, who knows? Maybe they're better suited for an equity injection, which is 0%, right? Because they don't have to pay it back. All right, let's see if I have any other questions I've not answered. All right, Tony's asking a good question. So what if they raise their first 100, and I'm paraphrasing here. So if you, we help them raise their first 100,000, but I think Tony's asking, what if they don't want to stop? What if they want to continue to raise capital? That's fine. We continue to work with them, and then you continue to make that 5%. So let's say they raise their first 100,000, so you get the 5% performance fee on the back end. And then they want to go raise another 100,000 just for simplicity. Then we work with them to raise another 100,000 and you get another 5,000. So you'll continue to be paid as multiple tranches of capital progress. All right, are there any other questions that we have not addressed? Oh, C's asking about 0%. Yeah, so there are different types of capital. The main two categories would be debt-based and equity-based, and we're doing more and more on the equity-based side, and that's money that doesn't have to be paid back. I wouldn't consider it a grant, but it has some similar attributes because now the client's getting that injection of $100,000 or more, and they don't have to pay it back. It's not a loan, it's not a debt instrument. All right, so as always, I ran long. I apologize for that. But the goal today was to get you refamiliarized, reacclimated with the Capital Ready package. This is a great resource. It's unique in the marketplace. It's going to make you adult money, and it's going to make a real impact. This doesn't mean that it changes all that we've talked about with the focus on going out and teaching and all the different literacy topics that we have. Certainly, you need to find leads. Just yesterday, we had a whole session on where to get leads from. One of those 10 sources of leads that we talked about was teaching. And so it certainly is good to go out and teach and use that as a conduit. But many of you are involved with business-to-business transactions now, so you probably have clients that you could refer in and start helping right away. All right, well, thanks everyone. We'll be back here tomorrow, same time, same place. Have a great day, and let's go make it happen. Bye-bye.